The market is turning, the bears are capitulating one after another, and Bitcoin is shooting past $90,000. We're back. The Federal Reserve is making some very, very good moves. We're back in bull territory now, at least in the short term. Some really, really interesting things have happened here. Hedge funds are now betting on Bitcoin, but we also have rating agencies giving us some very, very exciting signals about where Bitcoin could be headed next. But we still need to be a bit cautious about everything. It could also be a bull trap right now. Let's take a look at what's happening right now, why it's positive, and why the Fed is doing some very, very interesting things here. But before we dive right in, guys, take a quick second and smash that like button down below for higher Bitcoin prices, for new all-time highs. As a thank you, I'll show you the bullish Nook sunset again right here. And because today is a special day, at the end of the video, I'll also show you the ultra epic waterfall jump I just did here while canyoning. Truly epic. First, let's look at Bitcoin, which is shooting up again, back over $90,000. I've already gotten a message from my dad. So I already knew, okay, the Bitcoin price must have moved positively again before I even checked. He always sends me messages whenever things are going up. Then here, the S&P 500, traditional markets, also in the green, with a positive market close just last night. And honestly, I'd love to tell you right now that this or that triggered the whole thing. But just like we've had some senseless sell-offs in the past days and weeks, we've now also seen a very, very rapid rise in the Bitcoin price. Within 20 minutes, we shot up by several $1,000s here, without there being any real reasons for it. I mean, clearly, what we need to look at here is this. Here we see the FedWatch tool. We now see the probability of interest rate cuts at over 85.6%. And what we've seen in the past few days is that as the probability of rate cuts has risen, the Bitcoin price has also climbed back up. And now, since last week, we've gone up by 12%. And yeah, maybe the bears really were on the wrong side here. A lot of people have already declared the bear market. Many people said, okay, hey, come on, game over. It's done. We can go home. We'll come back to the bull market in 2 years. And often, when the mood is at its most bearish, at its absolute worst, that's when we see Bitcoin suddenly shoot up out of nowhere. And that's what's important. With Bitcoin, there are very, very few days that are actually relevant for price increases. That's why it's often a really bad idea to be sitting on the sidelines, because there are just 10 or 20 days that really matter if you want to catch gains in Bitcoin. And let's say you sold and weren't in the market these last few days, then you would have missed out on a big, massive recovery rally. Cruz Florian also gave a very, very interesting assessment. He says here that the U.S. state of Texas is buying $5 million worth of Bitcoin. NASDAQ wants to raise the contract limit for IBIT options from 250 to 1 million. JP Morgan is offering structured products on IBIT, following the example of Michael Saylor. Although I do see these products a bit critically. Yeah, I've already talked about why this should be viewed critically and how it could actually even be an attack against Bitcoin. Then IBIT lost only about 3% of its inflows last month, despite the drop in Bitcoin's price. ETF buyers are holding strong here, which is very, very good. Those statisticians are here. What we're seeing right now is the natural path of a store of value during its adoption phase. And Bitcoin is currently separating the patient from the spectators. That means, actually, a lot of people were just hanging around. But to be honest, it was a good process. All the weak hands got shaken out over the weekends, but the real diamond hands are still here. All the bullshit is just gone. It's just been washed out. And it's really like a little detox process, like when you go on a 2-week fast or something. And that's kind of similar to what's happening here in the market right now. And now I'm going to show you a really striking example of how quickly sentiment can shift with Bitcoin. Permabulls, who for a long time were writing and shouting, oh, Bitcoin is bad, we're going short now. And I still remember, this analyst we're looking at now, he was still opening short positions here and saying, forget about Bitcoin, it's really, really bad. And now, just check out how his opinion changed within just a few days or weeks.
By the way, I'm a huge bull on Bitcoin longer term, although again, you know, you got to see these situations straighten out. But the narrative, again, has soured on Bitcoin. A lot of big names coming out kind of saying, well, what's the point of Bitcoin if it's just a store of value, etc. I disagree. I still think there is a need for it. But again, the narrative switch is very interesting because a month ago, you didn't hear about that, right? And now we obviously see big money wanting to push it down, probably to accumulate at lower levels. It's de-risking in the market. The stock market's fallen off its highs, and these are giving added pushes to the downside. But
it's been torn into the market. The stock market has fallen from its highs, and these add extra fuel to the decline. But in the long run, that won't work. That's why in the long term, he's bullish on Bitcoin. I think in the long run, you're really in a bad spot if you trade against Bitcoin here. It's also interesting, and we need to take a quick look at this, a new comment from Max Kaiser, who also says here that after the stock market crash and further violations of securities laws, Jamie Dimon is starting his own scam with Bitcoin derivatives. That was what I briefly mentioned earlier here with Florian Proust, at the IP of the derivatives that were launched here, which I also made an entire video about just yesterday. So Max Kaiser now also recognizes this as a scam because the strategy here is simply to siphon off capital from Bitcoin and funnel it into the banking cartel. Whether it's actually fraud or not, that's something you can judge for yourselves. What was much more interesting was what else is going on here. Check this out. Here, Standard & Poor's is issuing new ratings, and this time it's not for Strategy, but for Tether. The Standard & Poor rating agency already gave Strategy a very, very poor rating, which is still better than having no rating at all. Oh, look back here. Ah, shit. Now we missed the sunset, but you can still see the last bits of it. Yeah, let's go. In any case, Saylor now has a rating, even if it's a bad one. That's still better than nothing, because he still gets access to new sources of capital. But what's surprising now is that Tether, the most profitable company in the world, which also has a lot of Bitcoin, has now also received a rating here. S&P Global has downgraded the stability rating of USDT to weak and warns that a drop in the price of Bitcoin could leave the stablecoin unsecured. The downgrade reflects the increasing exposure to high-risk assets in Tether's reserves. These include Bitcoin, gold, secured loans, and corporate bonds, as well as limited disclosure. Analysts say that Bitcoin now makes up 5.6% of USDT's backing, which exceeds the 3.9% over-collateralization margin. This means that a sharp drop in Bitcoin could push USDT below full backing. That's absolute nonsense, because Tether is backed one-to-one by US Treasury bonds. That means they already have over-collateralization. And if this over-collateralization drops a bit in price, then who cares? But on the other hand, they still don't get that Bitcoin is the best here. The greatest store of value of all time, they still don't get it. They probably think gold is a safe asset, just like all their weird government bonds and those strange A++ super triple ratings from the USA and Germany or whatever. They just don't get it at all. They don't realize that Bitcoin isn't just AAA. Bitcoin is actually like 21 AA+, or whatever you want to call it. Bitcoin is global, decentralized, and can't be censored. In the long run, it will outperform every government bond, outperform the real estate market, the bond market, and the stock market. And S&P 500, I meant to say S&P 500, but S&P actually has nothing to do with the S&P 500. Standard & Poor's is really just washed up here and seems to be completely sleeping on the whole Bitcoin movement. Does Strategy have a bad rating? Does Tether have an even worse reading here? You just have to say, guys, you didn't do your homework well. But that also shows that actually, yeah, I mean, rating agencies are basically worthless, just like doctorate degrees, because they don't do their homework and don't realize that Bitcoin also has its advantages. But what's interesting is that not all institutional players are so negative. There are also a lot of people who are very, very positive, like hedge funds, for example.
Look, since 2012, there's been over 16 times that Bitcoin's gone down more than 30%, 19 times more than 20%, 33 times more than 10%. It's volatile. It's going to continue to be volatile. Might be a little bit less, but we've seen that right now.
More than 10%. It's volatile. It will continue to be volatile, and that is something we should expect. It might be just a little less volatile than before, but as we have just seen, the volatility is still present. We just saw it. All I can do is feel sorry, but you didn't do your homework. Missed the point? Please take a seat.
Having said that, it's here to stay. It's going up. That's why we've launched 100% protected, 90% protected, and 80% protected Bitcoin for people given their risk appetite to participate. And they've done really, really well, especially in the last drawdown. It said some of the stuff that we've launched, they performed really well versus this last 30% drawdown on Bitcoin.
Like that last 30% drawdown on Bitcoin, who are saying, we're just at the very beginning. Bitcoin is here to stay. And it's really, really interesting that they're now offering similar products as Saylor. So more and more people, even JP Morgan is now offering similar products as Saylor. They're simply offering downside protected products because a lot of institutional players just can't get into such volatile assets like Bitcoin. They basically need a certain downside protection, and they're okay with settling for lower gains. They're happy if they only get half the gains, but they don't want that massive volatility. They don't want the huge downside risk. And that's exactly why these products exist. That's what Calamos is doing here as well. And of course, it makes a lot of sense for them to do this, because that's how new capital comes into the market. That's how new capital managers enter the market. And of course, for most of you, it doesn't make sense. For most people, it makes sense to hold Bitcoin in self-custody. If you want long-term outperformance, if you want to use Bitcoin, amplified Bitcoin, with a little leverage on Bitcoin, or digital credit on Bitcoin, if you want to be active here, then you just get yourself a treasury company, but you'll also have more volatility, and you need to assess that properly from a risk management perspective. In my opinion, the majority should always be in self-custody, but of course, you have to evaluate that for yourselves. And especially since this is aimed at retail investors, if you're institutional, then it's a different story. You can't do self-custody there. The majority has to be in the form of a security, like a bond, a convertible, a stock, or some new paper product from JP Morgan, or even from Calamos. I'm really curious to see how things develop here. And now check out this brutal band. Tomorrow's looking good.
And if you still want to buy Bitcoin now, go to 21 Bitcoin. With the code BitcoinHotel, you save 20% on fees when buying Bitcoin.